is happening, everyone? Happy Sunday. Welcome to Best Practices. Wanted to do a quick video on something that I thought about when I was doing my last video, which was on assets versus income. And it made me think about all the things that we need to change in our thinking before we go on this long-term journey of talking about developing wealth. A lot of times when we try to do something different, whether it is the real estate market or the stock market, considering starting a business, we have that uncertainty in our mind that comes about by what was placed there before, which was that false security, which I want to talk about on this particular video. And that false security for me is related to believing that it's much more safe to have a corporate job than it is to start your own business. And it's also related to thinking that my money is safer when I save than it is when I invest. And those two things can be absolutely false, and I'll tell you why. Now, I did the traditional route. I played college ball, went to a reputable four-year college, got a communications degree, graduated with a pretty decent GPA. Didn't go directly to grad school. I did go to grad school later in life, but have been on and off in the corporate world for upwards of 20 years. So I'm probably dating myself there, but it's all good. So anyway, in that time frame, I have been laid off twice, and just before we even go that direction, I've always been a good employee, always have been successful in whatever career I've been in. Laid off twice, and have been subject to a company disbanding twice. So in that 20-year time frame, I have been either downsized 2 times or have been part of a company that has completely disbanded and has let everyone go 2 times. There was actually another time where I was interviewing with the company. I actually got a call from the hiring director, and it was right before I took the job, and he basically was like, "I'm so sorry, I just want to tip you off. I don't think this is going to last." So I didn't actually take that job. That would have been 3 times. So 2 times downsized, 2 times company disbanded. So the corporate route is not, at least in my experience, is nowhere near as safe as we think that it is. And I can go into all the statistics. We can look into that. I can look up some articles. But business ownership is a lot more lucrative, a lot more safe. I know it's difficult. I know it's different than we think it is. But we have been conditioned by 4-year school, by the corporate world, that the safe play is to go to corporate America. And in my experience, I don't know if it would have been any safer than me starting a real estate business or franchising or choosing to do something that I was truly passionate about from jump over that 20-year time frame. So that's one thing where we need to break our previous way of thinking in order to even go on a journey of determining if these things like the stock market, real estate, cryptocurrency are good ways for us to develop wealth. Because if we're constantly having the back of our head like, man, I don't want to invest this $100 because I don't want to lose it. We'll spend the $100, we'll go out to eat, do whatever, and we'll spend that $100, but we won't invest it because we're so skeptical that there's going to be a return, but then we'll go to corporate America. I also wanted to talk a little bit about savings accounts. So I know we all have that in the back of our mind, like, man, I'm going to take a little bit from this check and I'm going to put it somewhere. I'm going to save it. And that's generally a good practice. The problem with it is, if you put it in a traditional savings account, it will be outpaced by inflation. Inflation is like 8.5% right now, which seems super high. The only problem with that is it's been higher. It was at 9% even last year. I think it's 8.5% right now. So if you were to put your money in a bank or in a COD like we talked about on our last video, and you get a 2% APR, not financial advice, it's going to be outpaced by inflation year over year. So you could have $10,000 and put it in the bank today thinking that it's going to be safe, Now, you might not lose it. It's going to be somewhere, but it's no safer in that bank with that 1% return than it is like burying it in like a mayonnaise jar in your backyard. So we just have to change the way that we think about money, the way that we think about developing wealth, the way we think about business ownership. And in order for us to talk about how to do that, what books to read, what I'm doing, the first thing that has to happen is that sea change that we've been talking about and really thinking about wealth building in a completely different way. So just when you're thinking, remember the things that you think are safe, that you think are secure, might not be as secure as you really think. Just something to think about. Hope this video has been helpful. Look forward to talking to you all on the next one. And remember to be your best you.